Now we are bringing the conversation back home, and we're talking about a business which is pretty substantial but doesn't really get that much airtime, and that's Reunert. It's got businesses like CBI, that's Circuit Breaker Industries, in the electrical engineering environment. It's got businesses traditionally in the IT and ICT area, and then also a defense electronics business. Market capitalization 11.6 billion rand. There you go. Price to earnings ratio 10.69. Dividend yield of 6.53%, which is high.
Yes.
Why do you think it doesn't get that much attention?
It's a real solid infrastructure play. Not very exciting in terms of growth, unfortunately. But it's a very well established, been listed for almost 60 years, I believe, or
exactly,
something like that.
because Mr. Reunert and Mr. Lenz were like ancient old guys during the Randlord era that helped bring electricity, the first electricity networks, down on the Queen Elizabeth Bridge in town, you know, when they took out the gas lights and they brought the electric ones in the 1880s.
Yes, so very well established. So a real solid infrastructure business, but not very exciting because, again, it's a little bit macro exposed in terms of the health of the overall South African economy.
The other thing worth noting is just about at the point where they'd done all the internal restructuring and slimming down, they had this issue where Nashua Mobile, which was their business in the mobile phone industry, kind of got squeezed by the networks and then got split up and sold to the Vodacom, MTN and Cell C. And that kind of put a bit of a pall over the results.
So what they've done is they've gone back to their core. So maybe those exciting bits which found difficult spaces to be in because of what you mentioned, is they've really gone back to their core of that power cabling. They've got the Nashua business, which is a little bit different, but it's really...
Which is the photocopier and equipment rental business with an associated lending book in Quince.
Yes, so it's a very strong, stable business, hence a very good dividend yield, well capitalized. It's really a solid business, a high dividend yield, but not great growth prospects, I think.
And what about this industry business they call Applied Electrical, which is the defense contractor? It's always been a bit murky, hard to exactly say, because they sell stuff with and to Denel. And they got international export programs. Presumably they go to these shows where people come in strange outfits and buy defense equipment.
So it tends to be, unfortunately, a little bit lumpy, that business, where you have these big orders and then you win them and you fulfill them and then they sort of go away. So a little bit project-based. So also not that smooth.
But they do have the business, which is African Cables, ATC Aberdare, which is a joint venture with Altron, which manufactures all the fiber optic cables and all the copper cables. And then CBI, I mean, that is like every single circuit breaker in the board at home. That is them and Voltex and a couple of others are the market leaders there. And every time a new house is built, that goes in there, or rewired, or a new mall gets developed.
So a very solid business. I think it's going to continue to be, but it's really going to grow by sort of CPI plus maybe a little bit of GDP growth.
It's even got a young dynamic management team. Alan Dixon, they took over from the previous guys, Bill Pretorius and stuff.
So a well-run solid
trying
business.
Hard, Let's have a look at the share chart. Because 5 years tells you, you see there, as you say, that's not, I mean, that's okay. I've seen worse. But I've seen better too.
This one you really buy for the dividend yield and a solid underpin to an income-based portfolio, I would say.
So hot right now, that's the question.
Not hot, because I don't see any growth. So I think if you're looking for growth in equities, this is not really going to give you that.
Bit of slim pickings. Okay, not hot on that one. Right, let's